Hi, this is Osama Rizvi coming to you from Primary Vision Network, and welcome to another episode of Monday Macro View. Today I'm going to talk about the oil markets and rather the important or bigger picture changes or the recent changes that have been happening in the oil markets because if we track those down, if we continue to follow them, we can foresee a lot of changes not only in the pricing trajectory but also in the wider oil markets and as an extension to the global markets as well. So first of all, jumping right in, look at this chart. This is the Russia and Iran Venezuela boost flows to Asia. Asia's top two buyers, which is of course India and China. What does this show? It shows that there was a very interesting article in Bloomberg that talked about the redrawing of the oil map, and I believe to a certain extent, and we've been talking about this when I mentioned that all of the oil price cap, the other regulation, the ban on exports and imports, that is not going to disrupt the oil markets, but only reorient it. So this is sort of, we can also say that this is the oil map, especially in the Asian continent, is being redrawn, as we see that in China and India took more than 30% of their combined imports from Russia, which was 12% more as compared to previous year. About 90% of Russia's exports within the Asian continent went to these two countries. So that speaks a lot about the overall changing of the oil markets and in the buyer supply side and in the demand and supply side. It's, Turkey, India, they have been taking a lot of oil from Russia and then they're exporting it to Europe. That's another side of it that we want to have a look about. But overall, Russia's oil story has become extremely relevant to the oil markets. China's economic growth has become extremely relevant to the oil markets, and with some sort of underlying weakness still existing in the Chinese economy that we've spoken on a lot recently, I believe the story of the oil will remain bearish. And as we go through, we're going to see why. And talking about bearish, total hedge funds position in the three main Brent and WTI futures contract doubled actually. Recently, in the previous week, they were the opposite. The short positions overweighed that of the long ones, but this has happened after the OPEC comments. So the OPEC has said that there might be chances of more outing, quote unquote, as speculators, as he warned the speculators. And given what I've said before, I think the overall demand picture still does not look very strong. There are charts that will prove this, and I believe we might see another production cut on their 4th June meeting. So that is why this has shifted. That is the reason of this recent shift. However, short positions have been recently accumulating as well. If we talk about the overall short position, the past 4 months, this has been the fastest since 2018, the accumulation of short positions. Also, there have been a lot of wild swings in the oil markets, and I believe both of these things are symptomatic of the upcoming uncertainty that will continue to exist. In terms of the demand, look at this really interesting chart by Votexa, which shows that 3 top crude oil exporters, Saudi Arabia, Russia, and US, had registered a combined 1.3 million drop in their exports. Saudi Arabia leading with 800,000 barrels, Russia with 3 after the announcement of 500,000 barrels cut. And then that of the United States remained a little bit resilient at 100,000 barrels. But the question is this sort of because of their voluntary cuts in terms of Russia and Saudi Arabia, or is it because of low economic demand? So if it is because of the second reason, which I think it is, that once again cements the case for an upcoming recession or a slowdown. And the next news of high LNG stocks, that also corroborates this narrative. So global floating inventories of LNG were at 0.55 million tons on April 20th, which was about 0.25 million tons last year. So that's about a 50% increase, more than 50% increase. China, which is typically an LNG importer, actually exported a monthly record of about 156,000 tons of LNG in February. Japanese demand was also because of this. Some of it was, of course, because of nuclear energy being used, but a lot of it has to do with falling economic activity. And falling economic activity can also be seen by the world trade volume, where global freight volumes have shrunk by minus 1.1% during the first 3 months of 2023 compared to the last year. We've spoken about this previously as well. London cargo at London Heathrow Airport is still 7% down. The shipping containers being handled at US's 9 biggest ports is still down from 3.1 million from 3.4 million last year. So that pretty much highlights the fact that the global economic indicators are quite worrisome in this regard. Also, global economic surprise index by Citigroup is also heading downwards. It was positive only a few months ago, and now it has turned negative. The yield curves are still inverted. Inflation is still there. Germany has entered a recession. So all of these points, while they talk about the overall global economic picture, they also highlight that there might be more impending imminent weakness or slow growth in the oil markets as well. Lastly, this was a very interesting article which talked about how Russia's exports have remained resilient in the face of Western sanctions, and this has been one of the reasons of the recent bearishness of oil markets. There was a report by CREA that talked about a 6% increase in Russian oil tax revenues on month-on-month basis, which is quite interesting given how much there's a price cap in place right now. There is a complete ban of Russian oil products in the West. But this connects to the first slide, where we talk about how this has not disrupted the oil trade, but only shifted its focus. So that was very important, I thought. Finally, the market sentiment tracker, as always. We can see that recession, Germany is already in recession. Global freight volumes are down, as we've spoken about. Energy demand shows a fall in economic activity. So does the fall in different indicators in China, as previously noted in the past week. Bearishness in the oil market is still persisting. Short positions continue to accumulate. Global economic surprise index is falling. And in terms of Pakistan, in terms of other global countries from the global south, we can see a lot of weakness, especially in terms of the debt crisis. The debt issue, which I will be talking about in the next show, that is quite serious. It's gaining momentum. So the overall market outlook remains bearish, and that is all from my side today. I just wanted to give you a quick update on what's happening in the oil markets and what to expect at the 4th June meeting. So see you all next week. Thank you.